Hello, my name is Steve Bigelow with the Candlestick Forum. Still seeing an uptrend in this market. However, there are some sectors that you might want to use to offset being totally long. We'll go through those. But right now we can see, whoops, how come it does this? That after the big bullish harami telling us the selling had stopped, the Dow came back up through the T line and over the last few days have done a doji sandwich, which would imply more upside. Stochastics heading up, watching to see if they can break out through this resistance level and this resistance level. So right now, bullish sentiment is acting extremely well, which is allowing for quite a few of the breakout patterns to really skyrocket because there's really no fear factor in the market right now. Same scenario over here on the NASDAQ. It did this morning star type signal, came back up above the T line, did a doji sandwich, gap up on Friday through the recent highs, implying wave 3 is in progress. So there's a very simple rule using the T line that you can stay long as it stays above the T line. We're still in an uptrend. However, there's some sectors that are showing weakness. The casinos, electric vehicles are selling off, but residential home builders are acting strong. So right now, look at Wynn Resorts, bearish J-hook pattern, doing a bearish flutter kicker right here at the T line, telling you there's still more downside. A good short on some of the casino stocks. And Lie, one of your electric vehicle stocks, had a bullish doji sandwich, implying more upside, but then you had the bearish harami and a gap down back through the T line, implying more downside. Also, there's a very beneficial aspect of the visuals of candlesticks. If you're in an uptrend, it pulls back and starts back up. It definitely has to get back up above this level. However, candlestick analysis allows you to see if there's sell signals before you get to that level. If that's the case, that tells you this downtrend is still in progress. That same scenario was seen a while back on Workhorse. You can see it was trying to do a J-hook pattern, but couldn't get back up through the recent high, started selling off. And right now you can see it's also doing a bearish J-hook pattern, failure right here at the T line, another one that could be shorted. Weibo, that's just your typical failure. The big bearish engulfing signal, now a doji gap down through the T line. This one can be shorted on weakness with the expectation you're coming back down toward the 50-day moving average, which also would coincide with filling this gap. So you might want to have some short positions on in your portfolio, even though the market's still in an uptrend. You can never tell when they pull the plug. The home builders are acting well. DHI, you can see every time they've opened it, even if they've opened it lower, they take it right back up. And now it's broken through the 50 with a gap up. And we're seeing that same scenario over here on Beazer Home. So that whole sector can be bought because it's showing some good strength. The T line is one of your most strongest indicators as far as what's happening in a trend. APT, for example, big breakout move, then your bearish harami, no good, except for the fact that they came right back down to the T-line area and started back up. So now you can see the J-hook pattern that was more clearly revealed by the fact they couldn't close back below the T-line. The T-line rule, I had somebody asking why the 8 exponential moving average, why not the 9, why not the 5? Don't take my word for it. Put the T-line 8 exponential moving average on your charts and watch to see how often the T-line acts as a good support level that tells you once you've closed back up above the T-line, you can stay long. Ruckus continues ever since this point. And what was one aspect, they've never been able to close it below the T line. And look how often it opens right on the T line or comes back and uses the T line as support and trades higher. This always kind of enhances the definition of a candlestick trading, that if the candlestick signals are the graphic depiction of investor sentiment and the T line acts like a natural support and resistance level of human nature, when you combine those two, you've got an extremely powerful trend indicator telling you when to stay in long positions. You don't have to be a sophisticated technical investor to analyze what's going on in human nature. So as long as the NASDAQ, as well as the Dow, well, what happens there? Stays up above the T line and looks like it's breaking out into new territory, you can stay predominantly long, but there are good short positions occurring right now. That'll be it. We'll see you in the chat rooms.